What's up, guys? Welcome back. So after I did my fractional shares video on Robinhood, I had so many people comment and reach out to me like, I'm not off that list. I don't have access to fractional shares. Does that mean I cannot invest? Like, are there any safe, affordable dividend stocks out there that I can use? And the answer to the question is yes. And I try not to use the word expensive or cheap because it all depends on value. But in this video, I want to talk about 3 dividend stocks that I believe are a safe purchase for under $50. And guys, I'm not just going to give you the stocks in my portfolio that are under $50. Like I have 4 or 5 stocks that are under $50 that I wouldn't necessarily call safe. I mean, they're in my portfolio for a reason, but I'm going to give you the ones I think are safe. And I'm also going to give you one that I don't own. And the reason why that's important is because just because it's under $50 doesn't mean it's right for your portfolio. I mean, maybe one day it'll make it into mine and I think it's a great company. I still think it's a safe bet, but for me and what I'm doing, it just doesn't work. So remember a couple things going into it. Just because I own it doesn't mean you should, and doesn't mean it's good for you. You should always do your own research. This is just me showing you what I'm doing. But it's also like how I would show a stock is a safe purchase and one that you can hold as a dividend stock, not necessarily a growth stock, although we want growth, but I'm speaking in terms of strictly just dividends. So first we'll talk about 2 that I do own, 1 that I don't, and then the other stocks that I have in my portfolio that are under $50 and why I don't necessarily consider them safe. So if you were to ask somebody about safe dividends, I think most people would bring up the Dividend Aristocrat list, which is a list of companies that have increased their dividend for 25 years or more. This dividend growth over that amount of time gives them a level of security. And you can look up this list pretty easily, as well as some other factors. I want to show you real quick. If you go to Google and you just type in Dividend Screener, I like the one from Market Beat. It's pretty straightforward if we look here. So let's see, current price, let's look under $50. Let's make them a dividend aristocrat, and let's make them have a dividend of over 3%. So good dividend, over 3%, not too low, not sketchy in the high range, 25 years of growth or more, and under $50. If we search for those companies, we see that they give us a list of 22. So we have some that are very familiar names and some that are not. And turns out all 3 of the companies that I'm going to talk about are on this list. And the first one is AT&T. I'm going to start with AT&T because I think it's one of the most criticized safe dividends out there. A lot of people are not comfortable with AT&T's debt. But if you dive a little deeper into what they're doing and you listen to their earnings calls, a lot of their debt was in conjunction with their acquisition of Time Warner, which is going to be a great thing for them. And also they're doing a lot of things right now to manage their debt. They're taking assets and they're trying to monetize them and they're trying to lower their debt. They have a great plan for the next couple years to eliminate that debt that they brought on when they acquired Time Warner. So although they have a lot of debt right now, it's mostly from acquisitions, and I'm very happy with the things that they're doing to eliminate those debts over the next couple of years. Currently, they're trading at just over $31, right in that $31 range. They have a P ratio of about 16, which is under the average of the S&P 500, and they have an awesome dividend yield of over 6%. Currently, right now, they're the world's largest telecommunications company, and they have their hands in everything from hardline telephone wires to their now expanding 5G networks, and also too now with their media and the acquisition of Time Warner. They've increased their dividend for over 35 years now, making them a strong dividend aristocrat. And their biggest competitor that I see is really Verizon, and their subscriber count is a lot more than Verizon currently has. So they are a major player. Right now, they have just under 165 million subscribers, and Verizon has just under 120 million. If there's one major hiccup and one part of their company that concerns me, it's definitely their direct TV. But I think even with the drop in those subscriptions, I think what they're going to do is try and manage that. And like I said, take some of those assets and monetize them, maybe sell them over to the Dish Network or something like that. I understand direct TV, but I'm not too worried about it because they have other things that are increasing it. And I'm really, really excited about the most recent release of HBO Max. HBO Max has been immediately criticized for its cost, $14.99, and the fact that it is more expensive than Disney Plus and it's more expensive than Netflix. But I think those prices will one day even itself out. And I think at that price point, I think they're offering what it's worth. They're offering a better service, in my opinion, and a more diverse service than Netflix ever did. I mean, Netflix was, their bread and butter was Friends, and now that's gone. So it's like, I'm not too worried about the price, and it's really the only criticism that I've seen HBO Max get so far. So between its long-standing history, the things that it has moving forward with HBO Max, Time Warner, and its outrolling of the 5G network, as well as its huge subscriber base and the years that it's paid increasing dividends, I think that AT&T is a very safe bet for anyone's dividend portfolio. The next stock I want to talk about is Aflac, and I think it's a great stock, and it's fun to say Aflac. I'm very for them, and I really think that they are a safe dividend stock. Right now, Aflac's trading for about $37 as a P/E ratio of 9.33, which is awesome, and a dividend right there over 3%. Now, it's an insurance-based company. It does most of its business, about 70% in Japan, and only 30% here in the United States, which shows that, here in the United States, Aflac, which is still a very popular company, most people have heard about it, it still has extreme room to grow here in the United States. It has a payout ratio of just over 27%, which gives it room to keep increasing its dividend even further than that aristocrat level, which is something that I really look for. Its debt level is extremely manageable, which also shows that it's going to be able to increase its dividend over time. And also, I think that this is really financial crisis proof. Although its revenue might go down short term right now, if we go back and look at the financial crisis from 2007 to 2009, they had a little bit of a dip in 2008, but they went right after that to all-time highs, which shows that, they can weather the storm of a financial crisis, which is what everyone's kind of talking about and thinking about right now. And if it were to get even worse than it is, because we have kind of rebounded, but if it dives back down again, I think Aflac will be able to sustain that dip. And during that dip, it's going to continue to increase their dividend and do all the things that it's been doing for its long-standing history. I think that Aflac is a safe dividend for anybody to have in their portfolio. I have it as well. The last one I want to talk about is one that I do not currently own. I will soon, but that doesn't mean that it's not safe. It just means that it hasn't found room into my needs just yet, and that's Leggett & Platt. Leggett & Platt is right in that low 30s range as well, with a dividend payment over 5% currently, and also has a P/E ratio under the S&P 500 of 14, and also in its sector, it also is considered a very valuable low PE. Now, this company has been a staple here in the United States, but it also has offices in 17 countries around the world. It owns tons of patents, and it also does things that I think protect it, like making its own material. Over half of the steel that it uses, it produces from its own recycled metals. It has an awesome reputation with its customer base, and it's also diversified among many different sectors, right? We have its residential things like its mattresses, the sewing machines, ways to make matches, all the way up to their commercials with chairs. If you sat on a spring or a mattress, there's a very good chance that Leggett & Platt made that. But they also do a lot of great work in the aerospace space with ductwork, hydraulics for forklifts, things like that. So they're doing things among a lot of different sectors. Now, one of the downsides of it is they are a very small company, and they're depending on that strong reputation with its customer base. And yeah, somebody might be able to come in and compete with what they're doing. So they are open to a little bit of competition, as well as some short-term risks like the cost of material, the cost of steel, and are people buying mattresses, buying chairs, things like that. But I think those are short-term risks, and I'm really not too concerned with their long-term outlook. I think although they are small, they are very secure. Don't think they're going anywhere. They've been a staple now. I think they're going to continue to grow and be a great addition to anybody's dividend portfolio. If we look at some of the other ones that I had that are under $50, Wells Fargo, as we know, the Fed put a cap on the amount of money that they can do for some shady business that they had years back. And who knows when that's going to be lifted. It's temporarily been lifted so that they could give money and loan people out during this crisis. But I think it's going to go, that cap is going to go right back on there, which, until we know when that cap is going to be taken off, I don't really know the future of Wells Fargo. I'm very comfortable with their company. I like them. I like banks. I like the financial sector. But with Wells Fargo in particular, until the Fed takes away that revenue cap that they can make, I wouldn't exactly call them safe. Budweiser, it's right there on the safe side for me, but I know there's an ethical side of this. People don't want to really invest in companies like alcohol companies. So because of that ethical side. I love Budweiser. Craft beer isn't going away. I'm from the beer scene. I used to own a craft brewery, so I know a lot about their inner workings. Sam Adams and Boston Beer Company, they have an amazing stock as well. But I think with Budweiser, I think it's pretty safe. It's a global company. They're going to be acquiring people, but because of that ethical reason and because it might not be great for everybody, I left them off my safe list. Realty income is right there at the $50 mark. If it was under 50, I think might have made my safe list. I'm really, really bullish on what's going to be happening with realty income. Verizon's right there. Like I said, the competitor to AT&T right there, that $50 mark. And Pfizer, I'm not sure what's going to be happening with Pfizer. I think they're a great company, but they do have a merge coming up. They have some open patents coming like that. So I'm not too particularly sure. I think there might be a dividend cut coming when they make that merge. So until I really know a lot more about that current situation, I didn't want to come on and tell you it's safe. It might be. I just haven't done enough research yet to speak intelligently on it. Leave in the comments a stock under 50 bucks that you think is safe. Let's see if we can add to the list and see if there's one that I missed. And if there's one of the stocks that I listed here that you hate, tell me why. I'm always here to learn. Here's a list of 5 stocks I think you can buy and hold forever. And here's something that YouTube will recommend to you that they think you might want to watch. And until I see you guys on the next one, stay positive, work really, really hard, always be kind to other people. I hope you have yourself an amazing day and an even better tomorrow.